Okay, Professor Jim Schultz here from my Finance 512 class. I just got done shooting that watch list video, and so I wanted to kind of keep things going here and get another technical analysis video out there for you guys. You have a couple already on the website, but hey, going over this stuff another time is absolutely worthwhile for all parties involved. And so I really am hopeful that we can kind of go through some of the technical analysis techniques we went through in class last night, and I can kind of help you guys accelerate up the learning curve in understanding how to find support, how to find resistance, how to spot pin bars. Maybe we'll find some engulfing candles, kind of stuff like that. Alright, okay, so let's take a look at this. So I have this watch list open, so what I'm going to do, since we already talked about all this stuff, I'm going to go ahead and hide that for just a minute, just so I have a little bit more room to work with. Alright, so here's the first thing I want to show you guys. As you can see, this is a candle chart, okay? The first thing that I want to mention is whenever you are looking at a candle chart, trying to do technical analysis, make sure you have a minimum of 80, 100, or 120 candles on your chart. So what I mean by that is this. If I left click and drag it over, it just highlights a few candles, right? And we'll zoom in on some of this stuff in just a minute. But when you're just trying to get kind of a broad swath of what's going on, this gives you no context. No context. You've only got, 20 candles on the screen? You have no context of what the market might be trying to do, right? And so I'm going to right click and go to auto zoom, which will bring me back to the screen that I was on. So that's the first thing I wanted to say. The second thing that I wanted to say was this style chart, or this style command. This is how you can change the chart type to a bar chart or a candle chart, whatever, a line chart, right? Make sure you're using candle, because that's what we're talking about, right? I want us all using candle charts. The other thing I want to point out is this. This is where you get to segment what time increment your candles are in, okay? So for example, let's go back to the main chart here. If you look up here, I'm looking at IBM. I'm looking at a 1 year daily chart. So that means this is 1 year of time. Each candle represents 1 day. So what I could do is, if I wanted to, I could change that. I could go intraday, and I could do like, hey, give me the last 5 days and make every candle 15 minutes. Okay, boom. Now what do you see? You see a totally different picture, as we talked about in class, right? Now I don't trade off of 15-minute charts, but I encourage you guys to try everything. I mean, give it all a try. Trade the 5-minute charts, trade the 10-minute charts, whatever. I mean, I did that. Throughout my journey, I've tried it all, and so you really have to kind of figure it out for yourself to determine if something works or not. So I'm going to go back to the daily chart that I was on, because that's what I wanted to focus on in this video for IBM. But I wanted to make sure I showed you guys kind of how you're able to kind of change those settings. All right. Oh, the other thing I want to point out: how do you print your chart? So another thing you want to do is you go to Style, and then go to Print Chart. So if you click on that, theoretically something should happen. There you go. So I'm not going to actually print this, but this is how you print your charts, because you have to turn in charts with your technical analysis, right? So with your technical analysis, you have to turn in charts. And with your technical analysis, I expect there to be actual analysis on the chart itself. Okay? So when you turn in a technical trade, you essentially have two requirements in terms of your analysis. You have to write up your analysis on the trade report. So give me a summary of your thoughts. But you also have to, we should be good. We should be able to power through. Hey man, I'm using an old PC. We should be able to power through. So not only do you have to write up your thoughts on the trade report itself, you have to actually turn in a chart. The chart has to be marked up as well, because I want to see that you guys are actually doing some analysis on the chart. And you can just do that with, pencil or pen. So what I would recommend you do when you print this chart is, when you go to Appearance, click on Monochrome. That's going to print it out in black and white. You don't want to print it with this dark background, because first of all, it burns up a whole bunch of ink, and second of all, it becomes difficult for you to write on that so that I can see it, right? And so click on that monochrome. Alright, so let's actually get into some technical analysis. Okay, so IBM is a stock that I watch all the time, and I think you've kind of got an interesting situation brewing in IBM. Okay, Okay, so here's the first thing that I want to talk about. And we actually didn't talk about this in class tonight, but it is one of the first things that I try to figure out when I open up a chart if I want to put on a trade technically, from a technical analysis standpoint. It is, what is the trend? So what is the prevailing trend? Now, to figure out the trend, it's pretty simple. For an uptrend, you want to see higher highs and higher lows made throughout the peaks and the troughs of the chart. Okay? So what do we see? We have, if you look at IBM, it kind of was waffling in this range for a while, right? And then what happened? You have a high point here that was very similar to these areas back there, right? So here's what I'm going to do. I'm going to go to drawings. I'm going to go to price level, and I'm going to drop a horizontal line right there. Because that's a pretty interesting level, isn't it? What is that? That's resistance, right? That it did finally break through, and now we might have something interesting happening right here, which I'm going to talk about in just a minute. Okay? So that is just an interesting level that immediately catches my eye. Here's another interesting level that catches my eye. Look at what's happening back here. You have a low, and then it came back, and it kind of hit that low, and then you had a huge gap down, and that actually apparently happened on an earnings call, which is not that unusual. But even still, I'm going to mark that level off just for kind of future reference, right? And you can label the lines if you want to. I usually don't, because it doesn't matter. Because again, support becomes resistance, and resistance becomes support. For the purposes of, well, let me rephrase. I don't usually label my lines because I've been doing this for a really long time. For you guys, I want you to label your lines, right? And so, you would call this resistance, possibly turn support. And so that would kind of be how you want to handle this guy right here. Okay, but what is the prevailing trend? Well, here there was no trend. It was just back and forth. It was in a range, we would call it. But then what happened? It broke out. It made a high. It made a higher high. So look at this high. It's higher than that high. So if I go to drawings and I go to text note, I'm going to drop a little H right there for high. So it made a high right there, and then it made a low right there. We're talking about a relative low, right? A peak, trough, peak, trough, peak. But now this is a higher high, right? So I'm going to call it HH. There's a high, there's a low, there's a higher high. Now it looks like, what has it made? A higher low. Higher low. So what do you have? It looks like you might have the beginnings of an uptrend here, right? So it looks like you might have a nice little trade on your hands to get long IBM, because you essentially have three pieces of evidence that are telling you the same thing. So what do I have? The first thing I have is I have an uptrend. It's easier to buy, well, let me rephrase. Many people who believe in technical analysis believe it's easier to buy, it's easier to trade in the direction of the trend. So if there's an uptrend, you want to be a buyer. If there's a downtrend, you want to be a seller. That is just conventional wisdom. That is the prevailing thought. The prevailing thought when it comes to technical analysis. Now, does it actually work? Is there any truth to that? Well, we'll talk about that at the end of the semester, kind of like I told you guys in class last night. But we have an uptrend, so there's my first buy signal. Second buy signal, we have resistance that now has clearly, very obviously, turned into support. Very obviously. Like, it's plain as day. Like, you cannot argue that this stock is kind of having some issues at this level. So that's a second piece of evidence that's telling me that this might be a buy. So based on those two pieces of evidence alone, I would probably consider buying IBM from a technical standpoint. But guess what? And you guys may already see it on the chart. If you do, that's really great. There's actually a third piece of evidence. And this, in my opinion, is the strongest piece of evidence. So what I'm going to do is I'm going to highlight this area so we can just look at it a little bit more closely. We can dial in on the actual candles. So if you go through, if you just look at some of the candles, hey, this is pretty interesting. What is that? Hey, that's a pin bar, right? Is that a bullish pin bar or a bearish pin bar? Well, it's a bullish pin bar, right? Because the shadow is pointing down, so then it's a bullish pin bar. And hey, if you would have bought that pin bar, you could have made a whole bunch of money. All right, so let's keep looking, right? These are some little baby pin bars in here too that obviously you could have made some money on. If you would have bought that, you could have made some money up there. If you would have, hey, if you would have sold that one, you could have made some money there. You would have bought that one, you could have made some money there. Hey, what is that? That is a pin bar too, right? So hey, here's a pin bar. You sell that pin bar, boom, you ride that thing all the way down, right? Now here's a pin bar. That's kind of like a doji, but it's also a pin bar. Now this pin bar, you only had a couple dollars to make on the upside, and then it would have crashed, boom, banged on you. But you still could have possibly made some money. But what do you see, plain as day? This guy right here. That is a bullish pin bar that is resting on a support level, right? And this happened, if you look at the date, it's on June 9th. If you look near the bottom there, it's on June 9th. So this was like a week ago. So, you know, you can still get in this trade. This trade is still good, right? This hypothesis is still valid because the price is only right here. And if you think this thing's going to make a higher high, then you're targeting some level way up here. You're not worried about missing a couple dollars, you know, down here. So you have 3 pieces of evidence telling you that this could be a buying opportunity in IBM. So there's a really quick and dirty technical analysis on IBM. So I'm going to auto zoom. So let's do another stock. Well, that's IBM. I'm just gonna, you know, I had that one kind of prepared for you guys. So here's what I'm gonna do now. I'm gonna change my time frame. I'm gonna go intraday, and I'm gonna look at a 1 hour chart. Yeah, I'm gonna look at like maybe 20 days. Let's do a 20-day 1 hour chart. Okay, that's a little bit better. Okay, so here's what I'm gonna do. I'm not going to do IBM because I just did IBM. So I have not prepared anything beyond this point. So this is all going to be, you're going to get a genuine, authentic couple of minutes of me trying to find possible trade ideas. So I'm just going to kind of look at my list. I'm going to say, all right, let's look at, hey, let's look at Facebook. So I haven't looked at Facebook in a couple of days. So let's see what the 1 hour charts show me on Facebook. All right, so this is interesting. So since we only have, you know, we have a whole bunch of blank space over here, I'm going to actually highlight some of this so it's a little easier to see what's going on. Okay, so I'm going to kind of carve up this chart and I'm going to see if there's anything worthwhile. Okay, so here's the first area that just jumps out to me plain as day. It's obviously this high level, right? This is going to be, so this would be like your key high that we talked about in class. And it actually got tested again and it failed. And so I'm going to drop a price level. I'm going to drop a price level right down there. Boom. So that's interesting. So if this thing marches back up to 82.95 or 83-ish, then I'm going to get really interested in getting short. So that's the first thing. This area looks pretty interesting, right? You just look, I'm just going to draw a line right there. And what do you see? A low, some struggles. It broke down through the support, but it kind of held, kind of not. And then same area, some struggles. So now I've kind of marked off kind of a range that it looks like Facebook might be trading in. Okay, you know, just some ideas, right? We're just kind of, you know, nobody's putting a gun to your head. You don't have to do anything. You don't have to trade anything, you know, ever. And so, but I just kind of want to see, you know, what's going on. So another area that catches my eye is this area right here. Just kind of an area of interest, right? I'm going to drop a line right down there because it just looks like Facebook has kind of struggled with this area, right? It hasn't struggled with it recently, but it's had several struggles with that area, so this area might be valid. Okay, so that's the first thing I would do. Next thing I would do is I would look for any pertinent candle formations happening recently, like in the last few candles, right? Because I'm looking to make a trade right now. So what do I see? I don't see an engulfing candle. I don't see any pin bars. So what am I going to do with Facebook? I'm not going to do anything. So this is a really good example for you guys because here's my conclusion from looking at this chart. I don't know what's going to happen. My conclusion is I don't know. I'm not even confident enough to put fake money behind this trade. And so I'm not going to do it. I'm just going to, you know, put my hands in my pockets and I'm not going to do anything, right? And so 80% of the time, 90% of the time, 95% of the time, that is actually the conclusion that I come to. When I'm looking at charts, that's usually what I conclude. There's nothing there. There's nothing there. It's not strong enough for me to motivate me to act. And there's nothing wrong with that. It's part of the learning process. Now, for you guys, you know, I wouldn't be so patient that you're not doing anything because for you guys, it truly is a learning process. But throughout my evolution as a trader, I've learned that it's just so much better and so much more profitable to be patient. It's so much better, so much more profitable from a technical analysis standpoint to wait for these prime opportunities if you're going to try to make money from technical analysis. And again, like I said, that might be a couple times a week, at the most. And so there's a quick video about technical analysis. We carved up the IBM chart pretty well. We took a brief look at the Facebook 1 hour chart, and so yeah, those are a few technical analysis techniques. As I said in class, definitely explore other things like Fibonacci stuff, like moving averages, trends we kind of covered in this video a little bit. An uptrend would be higher highs and higher lows. A downtrend would be lower highs and lower lows. So it would just be the opposite. Let me see if I can find a stock with a downtrend real quick. Just so you guys, I'm not even going to mark it up necessarily, but just so you guys can see it. It doesn't even matter what time frame it is. Let's see. Let's look at Home Depot. No, not really. I want to find something. What's been crashing? Well, Twitter's been crashing, but yeah, this isn't too bad. So, that's that you can't ask for a better pin bar. I mean, you got Pinbars sitting at resistance. I mean, you can cash that check. I mean, that would have been easy money. I didn't see that when it happened, and so that was something that I missed. Oh, by the way, one thing I didn't mention in class real quick for Pinbars, the bigger the shadow in relation to the body, the stronger the signal. You want the shadow to be at least 2 times the size of the body. If it's not at least 2 times the size of the body, it is not a pin bar. But when you find pin bars where the shadow is like 4, 5, 6 times the size of the body, like you have here, which you can figure out if you look at the top of the screen while my cursor is over that, you can see the open, high, low, and close. Right? You can see the OHLC kind of on the top toolbar there. But the bigger the size differential between the shadow and the body, the more valid the pin bar. Okay, so I definitely want to mention that. But this is definitely a downtrend. You have a high, then you have a lower, you have a high, you have a low, you have a lower high, you have a lower low, you have a lower high, and then you would probably call this the lower low. And then here's your lower high. So the question is this thing gonna fall down here? I actually don't think so. I'm actually long Twitter. And so I hope it doesn't. I hope this is not a downtrend. But technically, yeah, this would be a downtrend. So I hope this was helpful for you guys. We went over trends, we went over support and resistance, we found some pin bars, and we talked some technical analysis. I hope that you guys found this useful.